Newmont may have been the first to report their earnings in terms of gold producers this cycle, but they certainly didn't set the tone. The next round of earnings were released on Tuesday evening ahead of Agnico on Wednesday, and well, the response was positive. The response was particularly positive for New Gold, whose earning beat resulted in all the Twitter bots pushing their garbage on social media, blocking us from getting to the valuable insights from market commentators. Regardless, excitement seems to be quite high here. Why is that? Well, let's dive in. New Gold in the third quarter of 2025 posted top-line revenue of $463 million, which is close to double the $252 million they recorded in the same quarter of last year, and represents nearly half the $980 million in year-to-date revenue recorded so far for 2025. Analysts, meanwhile, had called for $417 million in revenue for the quarter, so we got a strong beat on top line. That revenue figure follows the sale of 117,000 ounces of gold at an average realized price of $34.47 an ounce, alongside 11.9 million pounds of copper at an average realized price of $4.47 per pound. Gold sales improved 43.6% on a year-over-year basis from 82,000 ounces, while copper sales were down 12.7% from 12.6 million pounds in the year-ago period. While gold sales and revenues were up, so too were operating expenses, which rose from $108 million to $132 on a year-over-year basis, which was a result of higher gold production, which was partially offset by an inventory write-up gain of $5.1 million. Depreciation and depletion expenses were also up year-over-year, rising from $58 million to $69.5 on a year-over-year basis, which again was a result of higher gold production. New Gold in the third quarter overall posted net earnings of $142 million or 18 cents per share, which was a substantial 276% increase year over year from $38 million or 5 cents per share in the year-ago period. On an adjusted basis, the year-over-year was less dramatic, with adjusted net income rising 210% from $64 million or 8 cents per share to $200 million or 25 cents per share. In terms of cash flow, cash generated from operations climbed from $128 million to $300 million, while free cash flow nearly quadrupled, going from $57 million to $205, setting a new record for New Gold in the process and beating their prior record set in Q2 by 225%. That strong cash flow led to the company repaying in full the $150 million drawn on their credit facility related to the new Afton transaction earlier this year, while a total of $260 million in debt obligations were paid in Q3, with New Gold ending Q3 with cash and cash equivalents of $123 million versus $226 million at the end of the second quarter. In terms of production, the second quarter was a record for New Gold. The company produced 115,000 ounces of gold and 12 million pounds of copper, with that production led by record output at Rainy River, which compares to the same quarter of last year, producing 78,000 ounces of gold and 12.6 million pounds of copper. The Rainy River mine accounted for 100,000 ounces of gold in the third quarter, with gold production through the first 9 months of the year now representing 70% of the midpoint guidance. The quarter also saw the on-site mill demonstrate the ability to process gold at levels required to meet 2026 production guidance. Underground development also continued to advance here, with initiatives undertaken to upgrade camp facilities alongside contract modifications to reward improved development rates. New Afton, meanwhile, recorded just under 15,000 ounces of gold and 12 million pounds of copper production during the quarter. Production here saw head grades decline near the end of the quarter, in line with the mine plan as B3 cave neared exhaustion. Year-to-date production represents 77% and 71% of gold and copper production guidance, respectively. As for costing, cash cost per gold ounce sold on a byproduct basis fell from $741 an ounce to $639, while all-in sustaining costs fell from $1195 an ounce to $966 an ounce, with those improvements credited to the increased production levels at Rainy River. On a site-by-site basis, Rainy River saw cash costs drop from $1,028 to $836 an ounce year over year, while AISC fell from $1,327 to $1,043 an ounce. New Afton, meanwhile, saw cash costs move from $775 to $859 an ounce, while AISC climbed from $828 to $900 an ounce, which is still low by industry standards. As for the 2025 annual guidance, New Gold is heading into the fourth quarter in a good spot. Guidance currently calls for 325 to 365,000 ounces of production this year, with the company currently at 71% of the guidance midpoint, which might seem low to some observers, but production here was back half weighted. Rainy River is currently expected to come in above the midpoint of their 265 to 295,000 ounce production guidance, while New Afton will see production right near the midpoint of their 60 to 70,000 ounce gold production guidance. Copper production guidance at New Afton is also expected to hit the midpoint of their 50 to 60 million pound estimate. In terms of costing, however, things are a bit higher than the company had hoped for, with cash costs trending above the midpoint of the guidance range of $600 to $700 per gold ounce sold on a byproduct basis. New Afton is expected to be below the low end of their guidance range. However, Rainy River will be near the high end of their own range, which on a consolidated basis is expected to cancel each other out. AISC guidance of $10.25 to $11.25 an ounce is also expected to come in above the midpoint, with a similar pattern in terms of site-by-site costing as seen with the cash costs. Sustaining capital, meanwhile, is currently tracking towards the low point of guidance, while growth capital is headed for the midpoint of the guidance range. As for 2026, while no official guidance was provided with the release of the Q3 results, New Gold has said that production is expected to ramp at both New Afton and Rainy River as we head into 2026, setting the company up for what should be an even better 2026. All right, so let's wrap things up. Q3 was an extremely strong quarter for New Gold. Record free cash flow off the back of record production and falling cash and all-in sustaining costs is an excellent spot to be in this gold environment. That position enabled them to pay down some debt sooner than expected. And well, there's really nothing to complain about in terms of their performance, which is probably why the equity climbed as much as 15% following the release of the results. As for us, let's just hope their peers report similar results to kick this bull market into high gear. All right, everybody, as always, thanks for watching. If you want more earnings videos, check out our channel. We got lots of them coming for you. And if there's stories you want us to cover, as always, let us know in the comment section. All right, everybody, if you enjoyed this video, do me a favor, smash that like button, subscribe, and ring that notification bell. Thanks for watching.